Hey, what's up, guys? All right, so for today's video, I want to talk to you guys the importance of using pre-market levels, aftermarket and pre-market. Basically, some of the basic things that a lot of retail traders like to use, a lot of scalpers. They like to trade on the 5 minute time frame and the 3 minute, the 1 minute, and so forth, and tons of indicators. But uh, the explanation for the pre-market levels is very important, and this is why I always talk about having the 4 hour. The 4 hour is what gives you every candle, every movement in the market on forward/ES, and having turned on the after hours and pre-market levels, because that's very, very important to have. So for example, here we have the 4 hour charts. And if you go on the 15, like everything is still on. Technically, the pieces that would be missing would probably be around here, right? So this full piece you would be missing, I mean the top and bottom, because market is only open and this is the only time that we're able to trade, right? So just to give you an example, these are the only ones. As you can see that the volume here dies down and there's really not much going on. But futures, in general, they tend to move from market open on Sunday and then market close on Friday. So it's like that with any other ticker. I mean, you go to Starbucks, the movement's a little bit different. You go to PayPal, the movement, you can see that it kind of just moved, it reacted, whatever case may be. SQ ended up having some news last time, so it gapped down right here, and then we kept on dropping. Amazon, same thing. Look at this nice gap down. So I just want to show you the importance of having the after hours and the pre-market. So you can see here that the difference, that the pre-market is basically all in this area, all this piece. Okay, so there's that time where we can't trade, but the market is still moving. So I just wanted to show you ES and kind of just want to simplify things. All right, so the important thing about it is to make sure you do have it and you do understanding what is going on in between, and the missing price action that you will have as details for you to move forward and to understand what is happening in between and afterwards. Okay, it's very, very important to have that. So make sure you have your after hours and your pre-market turned on. If you don't, you're probably going to be looking at a chart with a lot of gap ups and a lot of gap downs, which missing price action history is not good for judgmental outlook for the next day or just in general, period. It'll get you a lot of confusion, a lot of missing pieces to a puzzle. You're trying to build a puzzle, but yeah, you're missing a few pieces in between. You're never going to complete it nor understand the bigger picture. What you want to understand is the bigger picture and the missing price action that you don't want to miss. You want to have it in front of you, so all the price action is right in front of you. Okay, so remember, always the chart on the weekly and then the 4 hour, what the major levels are, what is it that you're going to day trade. So for example, we're going to talk about ES because it's the simplest one here that I can show you. And I want to make it clear that on the 4 hour time frame, we do have a little supply. So you can see that clear, right? So using this resistance right here from where we previously broke down, where we rejected, you see the same price action here, rejected the same price action here. And then here we ended up closing on Friday, right? Unfortunately, I wish we didn't have this green candle, but we're going to go with it. So I have two important levels right here. So it's a nice supply zone right now on the 4 hour being built. Okay, now I want to find my demand, and the demand clearly is way down here at the bottom. Now I want to get a little closer and make sure that I'm catching the proper demand where it should be, and this is the pieces where it's happening right here. So you want to make sure that you have the candle bodies close and you have the supply and demand within the actual range. If you want to drop it down further, drop it down way down here and then way down here, but you don't need all these lines, right? So give you the understanding again, we're going to get down to the pre-market levels, right? You have two pieces. You have the demand and you have the supply, okay? That's your first and foremost piece of the puzzle that you need. Then you just drop down on the 15, and some of you guys are wondering, like, how to use your pre-market to determine where you're going to enter and exit. Well, the pre-market levels are for scalpers. It's a scalping method where it's going to break above and it's going to go to the next level, okay? And we're going to just break this down real quick. This is the difference when it comes to supply and demand, because supply and demand, what you're doing is you're technically catching the bigger move. And let's just say you bought the dip down here, you're looking to take profit way on the top. So you could hold a you could have held a bigger position here within a SPY movement. But since the scalpers method is here, right, and I'm going to show you. All right, this is your scalping method criteria. All right, so first of all, we have a resistance right here. So you would draw that trend line because you're definitely going to need it. That's your pre-market high based on ES. Your pre-market low, I believe, is right here. We ended up cracking to the top right at the open. Oh, no, here you're actually grabbing the low. So in this case, you would grab the wick. All right, so this is your low. This is your pre-market low. Okay, now how do you even trade this based on ES? Okay, well, first of all, we're at a demand. You know, number one, we're at demand. Okay, so your entry is anywhere inside here. And this is where you're going long, all right? So that takes away from your scalping method because now you're looking for the break of the pre-market high in order to get some type of direction. In this case, people wanted to break above here. So this is what happened. All this here for a retail crew identified a lot of chop and no movement. That's what separates supply and demand versus the retail. The retail crew likes more confirmation on the break above the pre-market highs. And then below the pre-market low, then you're bearish. Okay, so look at right here is how the difference here on the 15. If you go on the 5, I bet you it has tons of noise, and this is why a lot of people call it chop. But technically, we see exactly what happened on the 15. We bounced that demand, and we went all the way straight into supply, okay? Now, how do you figure out your target? Your target is always the previous day high, okay? Here's your previous day high. But you want to also remember that you have bases to go off of. Look at this previous base. So technically you have a nice little base before the breakdown happened here. So here's your pre-market level. Boom. Here's your pre-market level. Here's your first target. Boom. You take profit. Look how perfectly it matches. Everything aligns perfectly. Bigger picture, you come back inside, right? And I always say that the levels never change. Okay. Here's your 1. Here's your 2. There's your confirmation. We built a base right there. We kind of broke down here midday, or well, towards the end of the day. And then we cracked right on above. And then we hit the second target. Boom. Here's your target 1. Here's your target 2. And look exactly how it played out. Boom. Exactly, right? Never played to the downside. Now, let's go look at another ticker that kind of played the opposite just a bit. All right, let's go look at Tesla. Okay. Remember, we're only looking at the pre-market lows, and you can always trail your position the minute you enter. The minute you enter, you got to make sure that that level is your entry level to stay short and to go short, right? So, you know, just an example, let me just delete this real quick. Because we don't need that. What we're looking at right here is just the pre-market levels, right? So that's how you would mark it. All right, so here's your little wick. There's your little trend line, and then the bottom right here would be this right here. Okay, so if you go on the 5-minute, I'm assuming the strategy here is to grab the 5-minute candle body closing below this level, and it's going to drop on down. Well, we did break right here aggressively on the first 15, and then look what happened. Okay, your entry was right there. Had you waited, your entry would have been here. Okay, on that retest, and your stop loss becomes that. Now, you would have entered a nice put play here if you caught that drop to the downside. I don't know how to play out in a 5-minute because I personally don't look at it, but this is technically your downside play. And once you go back inside, you're bullish to the top of the pre-market. Okay, so all you're doing is you're reversing what you're using as your entry and exit. If your entry here for puts, then that's your stop loss. You trail it all the way down no matter how low it wants to go. And that's why you have the bigger time frame targets. So if right here we break above, right, then we're going to confirm that we're going to the target of the previous day high, which technically we should have been looking at this top base, but we never really got there with Tesla. Okay, unfortunately, that did not happen. So what happens with a lot of traders here is that they get stopped out on all sides. First of all, if somebody would have gotten here, a new trader, they would have never known to stop loss right here. They would have waited and waited and waited, and next thing you know, they're bag holding a loser. So you could have got faked out real bad, or you could just scalp the crap out of it. And that's why I say that it's a scalping method, because the minute you break down, you're going to drop just a bit and you're going to sell into profit, which is like a 5-minute candle. Sometimes 2 5-minute candles if you're lucky. Okay, so here again, somebody probably tried to take the break above, and you could have scalped it. You could have made a few bucks right here from 848 to about 856. That's a pretty big move for Tesla, if you ask me. The premiums move like crazy, and you can make like 200 300 bucks off of that, believe it or not. So technically here, any retail trader out there would have said that Tesla was a choppy day today, because technically you never broke above a pre-market level. You faked everybody out to the downside and to the top side, and you really had no direction. It's what they would say. Okay, now let's go look at another one, and let me just pull up Apple, and just to give you an idea as well. So here, same thing with Apple. What you want to see here is a lot of traders ended up buying this right here. This is their break above. Sometimes if they're a little more risky, they go here. Okay, not a straight line, but as you can see, look at how we based out and then we started breaking down. You could have seen how like this could have faked out a lot of people and they could have made money to the downside, but then look, we broke above. Here, a lot of people like to grab the previous day high or the previous day intraday candle and things like that. So here in this case, someone would have probably tried to go long here as well, and they could have, targeted the top of this. So it's these little scalping, movements that a lot of traders out there use weekly contracts to, make tons of profit. And, percentage wise, the contracts move aggressively, and that's what they use to attract a lot of new traders, right? But it's very important to understand these pieces, because again, you can make tons of money and you can lose tons of money as well. Now let me show you Amazon as well. I think Amazon's a good one as well. It's just very difficult to understand sometimes. The bigger the ticker, the more difficult it gets. So here, I think most people would have used 28.25, just a solid high number. And technically, Amazon never had a break above, right? So what did people do in this case? They look for little patterns, and it looks like, I think on the 5-minute, there was like a little channel bear flag here for Amazon, and then this one just dropped down. You can see it could have faked out a lot of people here as well. And somebody could have got in right here and got stopped out real quick, and they would have never traded Amazon, because technically there was no other pattern involved with this. Now, if somebody kept on following it, they would have had the alerts here, and they could have made a little money on the break above here, right? And then ended up taking profit. And again, like I said, some of these scalps only last about 3 to 5 minutes, and they call it like the biggest move ever, and it just doesn't work that way for a lot of traders. So in and out plays, that's what these are. You're grabbing the previous day high. Again, look at this, right? Once we broke above right here towards the end of the day, unfortunately, that's where it happened. And we did break above these highs right here. This is where a lot of traders will look for. And then you'll see that extra pump, and then that'll be your target towards the end of the day, which is pretty cool. But that's why the levels never really change, because everything just stays the same. Everything's like a psychological thing where everybody's going to be trading the same exact thing, right? Let me just pull up Netflix here again. And again, look at this pre-market level. All right, where's your target? Well, your target kind of technically becomes this first, and then you want to drive down to the bottom. Look at that. And let me just show you how it happened. So you could have scalped Netflix right here. You could have taken profit anywhere down here, and you could have traded it again had you seen this little base right here that was built, and then you could have taken profit down here. As you can see, every level from the pre-market levels, from the previous days highs, previous day lows, those are very critical to have and understand, because that's what's going to get you your scalping method properly, right? Now let me check another one. Let's check out SQ. All right, let's go check out how SQ played out. All right, a lot of traders would have had this on SQ. I think somebody somewhere would have had this little piece right here because of pre-market. And sometimes you could just make up patterns. And I mean, this technically looks like a falling wedge on a smaller time frame. If somebody had a 5-minute chart, that's what they would be looking for. And technically, it kind of is a little falling wedge pattern into a demand of 100, which is psychologically there. So psychologically, if you see a pattern like this at a demand, there's a high probability that the pattern in itself will break out using and being able to understand the pre-market levels, right? So in this case, what the perfect entry would have been here is the weighting of the break of pattern. So the first pop you initially get on the break of the falling wedge, you get that initial pop, and that's what happened right at the open. And then it came down and retested, and then we pushed above. So most likely everybody will trade it above the high of day. Your first target becomes right here. Your second target, again, previous day high here. Look exactly how this all played out. Even with that little falling wedge, okay, because somebody out there had this pattern. All right, so here's your entry. If you didn't want to take this entry down here on the previous day low, sorry, the pre-market low right here, then you could have waited to get in here. Your first target scale out. Look at that, one candle for SQ from the break of 105.50 all the way to 107.50. That's a decent move on some premiums or ODTEs, however you want to call it, because this happened on Friday. Had you bought some time, you would have held it all the way to your second target. And look how when we came down, everything played out perfectly. Even here, it based out. So you drop down, go back up, and then push back up again, and then you're back at the same level. And look where we ended up closing. Okay, so a lot of it is psychologically, a lot of it is scalping methods, and again, that's not something that I personally do, but we can do, and it's something that you should have under your belt as a tool to help you and guide you when it comes to trading or day trading and scalping, and just understanding the movements of a ticker. And not always does it always play out on the break above. Sometimes it fakes people out, but those levels will give you confirmations that we're either going to break above or we're going to break below. And if we don't get that direction, that's why a lot of traders out there, retail traders, call it chop. And that's where the word derives from, because they don't understand that it's not breaking or it's not breaking above. Again, they don't understand the accumulation phase. They don't understand the supply and demand. But all this can be used as supply and demand and as a strategy and a tool for you to be successful. Look at CRM, right? For example, this year, right? Let's go look at the pre-market levels, right? So here's your pre-market low. As you can see, my alert never hit. And then here's your pre-market high. Right there, very simple. But supply and demand, okay? You look at supply and demand, and I'm just gonna give you a quick little box here, nothing special. All right, so you have this here, boom, all right? Supply up top, demand on the bottom, right? Nothing special, nothing perfect. You just can see it. It's very easy to see. You don't need a box to tell you. So when it gets to these levels, you know that there's resistance. When it gets to these levels down here, you know that there's demand, okay? So if we're breaking above the pre-market right here, then you know where's your target. Your first target is supply. So you're technically shooting for this top piece. That's exactly where we landed right here at 222. And this is why I was so eager to play puts right here, because your stop loss legit is right above. There's no reason for this to not get rejected. It's been rejected 1, 2, 3, 4, and then we closed above here on Friday. But again, you could have used this pre-market to just take it up, and what gives you a proper direction. Even though this looks like chop and somebody will call it chop, you can still use a pre-market level to break above and hit your target, or hit break below and hit the next target down below. So it's very simple to understand. You just got to be able to be in and out of these positions, trading some weekly contracts, trading some ODTs, whatever it is that you want to do as a day trader, scalper, on the smaller time frames, 1 minute, 3 minute, 5 minute, whatever you want, whatever makes you feel comfortable. Just understand that when you take the position on the break above, your stop loss should be right below. Okay, there's no excuse for you to back hold this position. If you take a put down here, it's the same thing. Your stop loss becomes right above, right? And then you trail, this becomes your break even. And then the first target on the previous day low or the previous wick, whatever is down here as your first target, becomes your next trail stop, and you keep on going. Okay, nothing changes, whether it's up or down. The momentum, the movement, the direction, it's going to go one way or the other, and it's either you're going to be in it or you're not. Okay, So remember to respect your stop loss, respect the pre-market levels, understand them, why they're so important. There's a lot of things that happen in between, but it doesn't have to break above. It doesn't have to break below. And if it doesn't break the first time, wait again, set the alert at the same level, and you'll know whether it's going to go up or down. And that's going to give you a good direction for the rest of the day, whatever the case may be, right? So look at here, even AMD, no actual break. So again, a lot of chop is what people would call it. That's why retail trader calls it chop, because they don't see any direction. And then they're sitting there like, oh, I should have gotten into this ticker so and so, or man, I missed the dip. Well, because they never buy the dips. Okay, so look at this. Here's your dip. Here's your resistance. Here's your dip again. Here's the breakout towards the end of the day, right? So hopefully this helps you guys understand what the pre-market level is, pre-market high, previous day low, previous day high, and things like that. But just remember that supply and demand is the biggest thing that you should be looking at, not focusing on just the little things that really are irrelevant. Okay, these are tools. They're tools you should have. They're tools that you should use, and tools to guide you throughout the day. That's going to provide for you a better day trade in itself, if there's something that you can search for, right? So look at Google. Just to give you an example again, look on the break above. Doji it out, confirmed. What was your target? Way up here, and it broke above. All right, so again, just giving you an example on how things look and how they do work out. Yeah, they work out perfectly. You just got to be able to see it and understand it. All right, so scalping methods, that's what they are, but also looking at the bigger picture where the actual supply and demand is in a ticker. All right, so hopefully this helps you guys. If it doesn't, let me know. I can definitely do a little more on this, but really it's kind of just self-explanatory. Break above, your stop loss right below. Break below, your stop loss right above. Your target is the previous day high or previous day low. It's very self-explanatory, nothing too crazy, nothing too complicated. So yeah, I'll see you on the next one.